Hey, Mark. Thanks for being here this morning. 5 minutes late. My apologies. All right, we got some good stuff though. Or I'll remember to make sure that my technology's working. We have the crypto quartet working. It's blurry behind me for some reason, but that's the least of my problems. It doesn't usually do that. I don't know why it did that. All right, so let's see what's going on. First, let's remember to share the darn screen, of course, especially because I don't have my phone close to me. Now it's in my pocket. Mark would have texted me. All right, here we go. Share the screen. Or Marcus, somebody would have texted me. Tom, I would have got 2 or 3 of them. All right, there it is. All right. Oh yeah, I was looking at something I'm going to show you guys in a while, or if I remember. Okay, so let's check out the old SPY. Let's just start on the SPY. I thought I saw it was gapping up this morning. Did I not see that earlier? Jackson, what's the matter? I thought I saw that. I mean, it may have been the ES, and I know there was a contract switch. So maybe that's what I'm getting it confused with. Anyway, who knows? Okay. We'll have to trade the chart that's in front of us. I guess the contract switch in the ES was yesterday. I didn't look at the ES chart yesterday. All right. Well, anyway, no gap up today. I don't know what I was thinking. All right, let's look at the Qs. Wishful thinking. Maybe the Qs. Yeah, there was. The Qs opened right at the top of this bar, and it was a gap for a while because I looked right at 8:30, and I think the SPY did too. But anyway, okay. I wasn't just seeing stuff. I checked as soon as the market opened. I promise. All right. I've been working here on the computer since early this morning. Let's check out Google taking a break. Google is a similar chart to the market. I mean, there's not a huge difference between. I mean, anyway. All right. Well, good job for Google holders. Can you imagine working your whole life for Google and a lot of your buddies cashed out, 5 years ago for millions or whatever, and you said if you still had yours, or wonder if you work for Oracle or one of these companies that's just gone ballistic lately. Jackson, what's the matter? Please just chill out, buddy. Come here. He's chewing on stuff. It's okay, buddy. It's okay. All right. All right. I think when I get excited, he thinks it makes him excited. It's not that big of a deal. All right. So Google's awesome, right? Let's look at MicroStrategies. Good boy, James. Good boy. You want to make an appearance? Oh, well, look at you. Would you check you out? Oh, and it's on blur screen also. I don't know if you guys saw it. Anyway, and I think I may have forgot to set it in 1080 this morning. Jackson, hang on. I think he wants food. I'm sorry. Gosh darn it, Jackson. All right. He has food. This dog just wants attention. Here you go, buddy. All right. Good boy. All right. MicroStrategies, just these 30-minute charts. I mean, anyway, it's down. Sorry about the delay in the programming. NVIDIA sideways. Let's look at VIX and VIVIX, and look at the second day in a row they're going up. What's the deal? What is the deal with that? So the VIX going up, of course, it is super oversimplification to equate the VIX with Joes and the VIVIX with pros. But anyway, they're both going up today. But I do think it's something to be aware of. It's just VIVIX is just a second order derivative of VIX. I believe, really, but I mean, I don't know. I only have like a couple of like one class in statistics in college. All right, and you guys can tell me in the comments if I'm wrong. I'm just trying to pacify this dog. All right, so let's see what else is going on here. Jackson, you cool now? Here you go. You can go with that. There you go. Okay. let's do this. Let's do Crypto Quartet now. All right, look at that. It opens. And so I was really excited because I got up at 7 this morning and I wrote a script where it's a long story. I don't even worry about it. But anyway, but this Crypto Quartet should start working a lot better in the future and more reliably, and it shouldn't be as dependent on me remembering to do stuff. All right, so it just happened to open to blocks, so let's just go to blocks. Now, that's with the huge caveat. Sometimes Google gives us bad prices here and there, but I mean, other than that, the rest of it should be a better service. But anyway, I would believe blocks is sideways right now. That I'm not even going to check that. Okay, I'd believe it's down. That's fine. The average stock is down. What's going on? I don't believe this one. This is the one I'm calling BS on. But I'm not even going to get it started. Who cares? It's not that big of a deal. What matters is the number on the far right. Blocks open down 81 bips, right? So anyway, I have a cool new ETF to show you. You're not a new ETF. We'll look at later. I left a tab open. Yeah, blocks is down 81 bips, whatever. They didn't pay a dividend today, did they? Now, I don't know what their dividend day is. There, it's right there. It's on. I mean, yeah, but no, they didn't. It's Friday. Friday's next day. All right. No big deal, though. They've had a great week, right? I mean, that's nothing in the grand scheme of things. All right. So, looks like Galaxy's hurting them. IREN. Coinbase is pulling back a little bit. Who knows on this one? I doubt it. But anyway, this one I know they have ETHA. And that's a good quote most of the times. And Bitmine immersion's down. They don't have too much Bitmine immersion. Some of these other funds we follow, and I think we'll see in a second, are more like 5 or 7%, and these guys are 1.7. And I like, I don't know if I like this or whatever, but I think it's interesting also how these guys use some kind of probably statistical measure right here, because look how perfectly aligned the percentages are. Whereas the other ones I think are more option traders, and they're like, hey, Johnny, cover 20 contracts, and they cover 20 contracts, and these guys allocate based on probably some kind of algorithm. But it's cool how it keeps their stuff evenly distributed, but on a gently downward slope. But anyway, so you can kind of see their also Circle's been good and bad, but I mean, they don't have very much of that compared to these other funds. All right. So speaking of the other funds that I was kind of talking about, let's go to LFGY, because that's kind of the best parallel. Where is LFGY? LFGY chart. There we go. Okay. So Bitmine immersion, these guys have, and I was exaggerating as usual, they have 2.6. They have more, but not 5 to 7. Okay. They have in the past before. They've had more. But that's actually one of their smaller positions too. All right. So this is LFGY, their biggest position. And heck, they're very similar. I mean, they're somewhat similar because these guys are 10% in IBIT, but the other guys, blocks have 3 indexes that they're 10% in or so or more each, but blocks is heavily indexed with ETHA, FBTC, and the other one that I can't, HODL. But this one has just basically owning the whole index also. It's 10% of the company or the ETF. All right. All right, so for some reason the average thing isn't working. I think this one it is. No, maybe this one it is. No, anyway, it's fine. It's fine. That's an easy fix. Okay, well, I'll go fix that later. But anyway, we can see. Let's just go let's do it this way. Look at LF. Look at the one chart compared to the other. I should overlay them, but But it looks like they're just virtually, I mean, it looks like they're close, and yeah, very similar type. They have similar underlines, different strategy, and they're different managers. I'm not saying they're the same fund or whatever. I mean, they're totally different. I mean, anyway, but it's interesting though that they've, yeah. All right, so let's go back to Crypto Quartet. All right, so let's go to Alti. Yeah, the average thing isn't working. I had AI write the script, but I forgot to write in the part about the average. It's fine. I'll fix that. I'll fix that. It has to have a line down here at the end that says average, and then it has to add a line that anyway, it's fine. I will fix that soon. But anyway, we can still see how everyone's doing. I mean, and which ones are costing money. This one's not happy today. Rocket Lab. So that is. There's Rocket Lab, and then there's Rocket Mortgage, right? There's just Rocket, and there's anyway. Yeah, and they have both of them, or I think, or there's similar tickers, and I always get them mixed up. SMR's costing them money today. Opens down 4%. Oclo's down. Well, that's what, not a very good day in this portfolio, is it? The only one that's up is Rigetti, and it's only up 0.5%. Is that right? Holy cow. Assuming the AI script didn't mess up anything else, and the rest of it looks fine. It just forgot to put the average and the stuff on the end. Bad AI. Well, I didn't know how to do that. I mean, you should have known how to do that. I do that every morning. If AI is not really that smart. All right. In any event, yeah, not a very good day for the longs. Not a very good day for the good. Not a very good day for the good guys. All right. Well, let's go look at Salty. Speaking of the bad guys, the shorts. Now let's see, Salty. It's going to have the same. Okay, for some reason they got it right over here. This is what it's supposed to do. This is all I ask. But anyway, okay. Well, they got it right actually on two of them, but just not right on two of them. Anyway, so this is perfect because we don't have to look. We shouldn't have to look. We will anyway. And for some reason, they need to take some zeros out there. But it's down 24 bips. How is Salty down 24 bips? You've got to be kidding me. Salty, what are you doing? I know this has Salty up 3 bips. Maybe Salty's turning around. Who knows? All right. It looks like they have some winners and some losers. I mean, those are big losers. That's a huge loser. Bloom Energy and Circle is a big loser for them today. And they have 4 or 5 others, but they only have but they do have 4 big winners too. So yeah, I could see them being flat, and that's what the average says. Okay. All right, Salty, hanging in there. Grind away, right? I guess. Grind away. Okay, so we've looked at all that. So let's look at the index buffer and see what's going on there. And then I have a little, we have something we could check out too. And we'll look at the max factor after this, and I'll take questions. We'll send the max factor till the questions, because you guys usually ask about ETFs, and we can look at them at the same time. All right. All right, well, look at these who are doing well. WDTE, what's the market? Yeah, market's only down 16 bips. So nothing's really statistically significant in here, especially in the Qs. I mean, blocks being down. No, this is noise, right? I don't see anything that stands out. I mean, I didn't see anything that stands out. Let's look over here in Yield Max Land. Murni, I mean, who cares? But I mean, good for it. It's catching all the upside, or almost all the upside, a lot of upside. AMZ's catching a lot of upside. Dizzo's catching more than all the upside. But anyway, on these flat days, it's really not that reliable. All right, so say hi to everybody. Mark, as usual, Marcus already said hi to you guys at the beginning of this. Mark's putting some information up there. Yeah, good prediction, Mark. Good prediction. Okay, so Thomas would assume VIX is going up ahead. Yeah, me too. And I just we always talk about the pros versus Joes and totally oversimplify it. But anyway, but I think what it really is the VIX, because it's the VIX of the VIX. It's just a second order derivative. But it's interesting to look at both of them. But they both been going up lately. Pros, Joes, everyone's hedging ahead of that. Correct. I agree, evidently. All right. So let's look at some other stuff. I wanted to show you guys this also. What I wanted to show you is I'm really impressed. I'm going to try to get this guy on the channel. Oh, by the way, Howard, I got back with Howard from Curve, and he's going to be on next week. We don't know the date yet, but anyway, I think you guys will like that because we can have tons of questions about all kinds of stuff. He has some interesting funds that are doing well. He's an interesting guest. He's been on before. All right. So all I did was I was overlaying. You know how I can't believe this Q. Well, first of all, okay, let's start from the beginning. This right here, remember yesterday I was talking about Q Up. This guy is the guy that runs Q Up, and and also Jay runs it. Jay is also a sub-advisor on this. His name's Kevin Kelly, and he has some other good. He's also a sub-advisor. This Kevin Kelly is a sub-advisor on Biddy and Baggy and a bunch of other things. But anyway, his own company has Q Up and Q Down. I'd like to get him on. And my point was I downloaded the prospectus because I always talk to you guys about it. And that is actually exactly, and I always say they put 10% of the money every day into a call, and that's exactly what they do, into an at the money call, dated for the same day or, one day. Generally, they can go up to a week depending on conditions, but I looked at their trade yesterday, they're buying at the money calls with 10% of the portfolio. So it's just an interesting tactical concept. Not for widows and orphans, or maybe not for anyone. I don't know, but it's one of the more interesting option strategy ones in here. But I wanted to show, but maybe I just need to get him on the show. But I got in the middle of the prospectus. But even in the prospectus, it says that 10 losses in a row, and the fund's down like 70% or something. And man, I'd be scared to death because sometimes the market will go down 10 days in a row. Anyway, that's the risk of the fund. But I mean, could you imagine in a bull market? So anyway, what I did this morning was I overlaid, and we do this all the time in that other program, but I overlaid Q Up with triple Qs. And triple Q or Q Up was really illiquid. It only trades like one time a day. It's a tiny cap. It has like 700,000, and Q Down has less than that. They're both really small caps, but this thing, I was really impressed how in the April pullback it didn't go down near as far. Not near as far, and it's held its own right here. I mean, I think it compares really well to T-triple-Q, especially for somebody wanting maybe just to have some, just to get some exposure to the upside for a few days, but you don't want to mess with calls. They're just buying options and rolling it for you. Most of you guys are listening to this would just do it yourself, but it's an interesting concept. To me, it's a very interesting concept. All right, so let's look at the max factor. The new max factor. And here it is. And here it is. We'll go to the main database. Now, I haven't checked this morning. I just took it on faith that this is working. But if not, I have a backup that was from at the end of the day yesterday, and we'll just look at that. That's good enough. But no, this appears to be working. Oh my God, this is like a miracle. Oh, and also speaking of guests, and I thought of this because of Rob, and he helped me with this, like I always say. Rob's going to be on Thursday or Friday of this week, and he has some new features as far as stock tools he's going to demo for us, and we can talk about other stuff too, crypto or whatever. So hang on just a second. I always copy and paste it to another sheet because I feel bad because when I'm sorting it all the time on the active on the sheet with the formula, I just copy the prices to another sheet, make it easier on the server. Okay, so let's look at. Last time we looked at the short term, and I said we'd look at the long term this morning. We'll just check it out real quick. Do you guys have any questions about any of these? We'll just check it out real quick. Gosh darn it, where do I have that open? Okay, I had a cursor somewhere. Okay, here we have it. Number one is Misty. I mean, and this is in spite of the NAV situation because a year ago it was at 23, 90 days. Yeah, 90 days ago it was at $20.55. Now it's at $15.45, the NAV. And so, but despite that, you know, the yield's 168. In part, the yield's that high because of the declining NAV. But and I factor that out, and I don't. But and when I make the max factor thing, but still, even when you consider that and you throw it all in together, I mean, what are you going to do? I mean, anyway, Maxi Goop. I mean, Goop's amazing. Now, if you look at Goop, it's the opposite story. Just because it has the opposite story of the underlying, it went from 28 to, well, a year goes at 28, 90 days goes at 25. Boy, that would have been a good buy. I need some at 25. Lately, it's been at 33. YBTC is a monster. 54% 1 year total return. GUI, I mean, GUI went from 15 to 14, you know, 15 to 14 and a half. That's, you know, but I mean, it probably paid a bigger dividend than Goop. It probably paid about twice the dividend. Yeah, and so GUI's dividend was, or distribution, it's not a dividend. Distribution is 35%. Goop's was 16, but either one would work. It just depends on your needs. You just the key is you have to know Google's going up, or be a believer in Google, and then all you got to decide. You can decide Howard, or you can decide Jay, or you can also decide Roundhill. You have 4 or 5 choices, which is awesome, and they're all talented. But I mean, some of them have different styles that you may like better. I'm excited that Howard's going to be on the station, and I have no idea what to ask him. I am we don't talk about curve that much here. I don't know if you guys are that into it. But anyway, it's fine, though, because we're going to do it live on YouTube, and I'll figure out a lot of stuff to talk to him about, some option stuff. But then you guys will have to fill in with the rest, or the audience, whoever's live on YouTube. All right, but anyway, YBTC, GUI, Snowy looks awesome. So Snowy's an example. Its NAV went from 17 to 15, so it dropped $2, but still, when you throw in a 75% yield, like I always say, not all distributions, not all yields are created equal. There's quality of yield, and I think that the max factor, because I've eliminated some stuff, I think I've figured out the high quality yields, at least the ones that have been in the past. This is in the past year. But anyway, Tesla, Babo, SLVO, YETH, YBIT, TSLP. All right. Anyway, if you guys have any you want me to look at, I'll be sure to look at them. We can look at the bottom 10. Maybe we should look at the bottom 10 once a day. I mean, once a week or something. Let's do that. Let's look at the bottom 10. The worst. Okay, Marnie, fiat. I have fiat, just a little bit. Not any less than 1%. Just a few. I don't know why I even have it. I need to get rid of it. But Marnie, fiat, AIYY, XYZY. That used to be one of the best. But I mean, look, that one's price has gone from 18 to 9, and it pays a 35% yield. Oops. SMCY, unfortunately. Jeez, that one's, I didn't realize that one had been gone down so much. Anyway, I have YQQQ, a ton of it, 13%. Unfortunately, I don't have any of the other low ones. So I got XOMO. Oh my gosh, I've got to rebalance my portfolio. But anyway, let's go to the high list. So let's go on the good list. But a lot of the stuff I have, it hasn't been out a year yet, like ALT-T and GPTY. Let's go to the short-term list. I'll try to make myself feel better. All right. For some reason, Biggie's not working. What is going on? And it's okay. Whatever. I could fix that pretty easy by just manually putting in the inception date. All right. Well, anyway, with the exception of Biggie not working, let's see how these look. The short term is YTH. Is that right? Yeah, that's right. GUI, Goop. This XYLG and QYLG makes me mad. QYLG is wrong. I'm talking to Rob about that, but I haven't fixed it in here yet. Anyway, my bad. So not QYLG. But anyway, but yes, Bobo, Tesla, NV2, TS2. You guys are like Rex. They're finally on the list. And so forget about here. This is a hand curated list. And so these are not, those have been bumped down. All right. So the list is, well, and Biggie, poor Biggie. All right. Number 1's YTH. Number 2's GUI. Number 3's Goop. Number 4's Bobo. Number 5's Tesla. Number 6, NV2. Number 7, TS2. Number 8, TSLP. 9, YMAG. QDTE, QDTY. Silvo, SDTY. I don't think I have one of those. Holy cow. Aptly, SVOL, XPay, iGold, XDTE, FEPI, OARC. Anyway, there's T-SPY. Lots of good choices on there, though. Lots of good choices. You could also just do this. Quarterly NAV return. I mean, we could also just sort by the NAV return for the quarter. That's just as good as probably my metric. I mean, I don't know. I like to think my metric is better, but anyway, if you just want to do this, call it your own metric, whatever. This is the market metric. Goop, YTH, GUI, TS2, KQQQ. Good job, KQQQ. NV2, Bobo, Eggs, IDEVO, Silvo, TSLW, TSLP, Soxy, Biggie, Spin. Look at Spin in the top 20. Aptly and NVDW. That's just sorting by quarterly NAV return. NVDW had the lowest on that list at 8%, and that for the quarter, and the highest was Goop with almost 34%. So anyway, you can, make your own metrics. You don't have to use the max factor, whatever. I think the max factor is fun because it considers some more stuff and it factors out some stuff that I know a lot of people are concerned about, namely the situation with the NAV. Or, I mean, it factors it in. And anyway, in a way that I think is novel. But anyway, all right. Well, anyway, if you guys have any questions about your favorite fund, I can check. Yeah, Marcus, you're really interested in Curve's upcoming fund. Yes, me too. I probably should just wait and have Howard on when that comes out so we can ask him about it. But who knows when that is? And, he's already agreed to be on. So we'll have him back on the day that comes out. won't be able to ask him much about that. He's just going to shut up. I tried to get him to talk about that on the live stream. I don't know if you heard, I was on a Twitter Spaces. I called into Twitter Spaces and they put me on stage. And then I started asking Howard, who was also on stage, or maybe he was a guest. I asked him to be on the show. He remembered our channel and he wanted to be. He said, yeah, no problem. But then I asked him when it was coming out, and he couldn't tell me anything. Then I said, okay, well, I have a suggestion for you. I'm going to give you a ticker. How about KLTY? And he just, Howard, he's straight laced. He didn't say a word. Some people laughed in the spaces. And anyway, and he goes, well, that's actually kind of a sensitive subject. I said, okay, Howard, I'm sorry. So anyway, but KULT or KLTY. It's got to be K. The other one's K triple Q. If I was him, I wouldn't name it KULT. And that's not what I said to him. That's a pejorative name. I said KLTY because that's just using ULTY and making the K version of it, because that's what everyone's saying it is. But also it's a sensitive subject, probably because his guys don't want people to think they just copied it. They probably have their own novel twist on it that's going to be better, they think. So I probably insulted him. But anyway, apologies, Howard, if you're listening. But for whatever reason, he's agreed to be on the show. So, all right, guys. Well, I'll let you guys get out of here. I appreciate you all for being here. I think we've covered everything, unless there's something we forgot to cover. We could talk about this, though. Thoughts about all the weekly roundhill. Could you build a long-term portfolio? I don't know. So the weekly, I think you can build a long-term portfolio with anything if you had it balanced out right. Let's look. And it just depends. It just depends. Let's see here. I don't have a way to sort by company yet, but I just want to see the highest W in here, the highest round hill. Surprised it's not before here. Okay, so it's NVDW. But yeah, those are awesome. I was just going to see what the volatility on it was. I'm just thinking, because of the little bit of leverage they use, even though 20% a week is not that much, it'd probably be fine. But leverage is leverage. It's going to magnify. But a lot of these things do 100 or do 300% a day. So, that there's a big difference between that and 20% a week. I think the 20% a week may be all right, but I think you might, I think you could build an income portfolio around it. Not, definitely not a growth portfolio, but these things do get a lot of growth because of the leverage. But I just think I'm making an argument against volatility. So on my metric, I have NVDW would be a 31 if it had a VIX. I wonder what the yield max would be, and I bet it's like 20% lower. Not that matters, but let's just look at that. There's TSLW also, but I bet the yield max one is higher. Let's see, I can do it like this. All right, let's go look at NVIDIA. Okay, so NVIDIA, if it had a VIX, based on my proprietary metric that Rob helped me come up with, it'd be about 10% lower. Those round hills are fine. It's just, they're fine. What I would do is what I always show how to do on anything is throw in some stable stuff, throw in some TO. But yeah, you could have I need to make that video. You could have a long-term portfolio with Alti. And I have a really good video that shows and explains exactly how, but it's because it uses a lot of TO with it. But I'm not saying the W series funds are are as volatile as Alti, but they probably will be, or whatever. I mean, or close to, or maybe more so. But the fund to funds, it'll probably be similar to Alti. So yeah, I'd say if you had it balanced out with maybe some QUSA or some ultra safe stuff on the low side, and just, yeah, absolutely, surfer line. I'll get that video about. I put some numbers to it on using Alti in combination with something like TO, something that's guaranteed, it's dead solid guaranteed, and then something that's not, like, and I used Alti and also looked at WiMAX. WiMAX is pays a big yield and is super volatile, so it's similar, and it's comprised of multiple stocks, so it's very similar, in my opinion, to Alti. And I have a video coming out where I show how much you would need of something guaranteed to offset all the risk in either one of those, and basically have the risk of an index fund. You can, but still get a huge yield. That video will be coming out soon. I mean, it will be coming out soon. So thoughts and all. Okay, so Marcus is saying, yeah, that you can. Round Hill just do worse than bear market. Yeah, 20% a week is just, I mean, I'm trying to put, that's just a different way to leverage. That's smart. I think they're being smart, but we don't know because we haven't seen a prolonged market how bad they're going to get hit. But people will just, I think people will just sell them, and the funds will just have less AUM in a bear market. They're just tactical, and then as the market turns around, people will get back into Round Hill. I mean, I don't think most people are in Round Hill are just going to try to set it and forget it. And hopefully we won't have one. I mean, who knows? We'll see. All right, surfing line. What are you talking about? Yeah, the Alti video. I've got to get that out. I've have it half written on Patreon, and I have all the back test and everything done. But yeah, I think it's an interesting video. So what I really wanted to do also is I'm trying to show how you can do the same thing with blocks, because blocks is even more risky than Alti, but it's good. But it's great fun, but it's even so. I was trying to see how much, but blocks doesn't quite have enough data out yet. But I think it's a similar. The too long don't read is it depends on your income needs. But I was doing 75 TOC and 25% Alti, and that was a 20% sleeve of $1 million portfolio. So you have $1 million portfolio, so 800,000 in VU or whatever. Vanguard, whatever, and then 20%. So it was 50,000 Alti and 150,000 TO, and it had a better. It's the best Sortino and Sharp I've ever got that I remember. It had a better Sortino and Sharp. It beat the market over since inception. Had a better Sortino and Sharp, and it was better than any. I was also looking at combining Alti with YQQQ or WiMAX with YQQQ in different proportions and trying to mitigate the risk that way. And that did mitigate some of the risk, but it didn't mitigate the risk near as well as this other method. So yes, I'm going to get that out. I'm going to get that out soon, very, very, very soon. Max, you should. Hey, Myron, how are you doing? You're more into, yeah, I know. So here's the thing. Yeah, I should, and I will. It's just today that I got a reliable way to get numbers on all these numbers. I don't even have one that's not working. So now that that's the case, I can have AI build all kinds of dashboards and search features, and I could make a column that says company, and we could pull all the ones by curve out if we want to talk about those, and then I can just compare those. We can make one, and then I can make a column that will say weekly, monthly, or quarterly, or a checkbox. Yeah, so I need to add all that kind of integration. I was having a big problem for a while, being able to get reliable information, and it's got a lot better lately as far as this part goes. So yes, I have all kinds of plans. I'm going to also build a dashboard so we can but yeah, so I'll definitely do that. I think that's a great idea, Myron. Yeah. And also, yeah, most people want to some people just want to talk weekly payers. That's the main thing. And then what about this? And I've actually had the Max Factor working where it did this before, kind of poorly, but I had a day of the week function, and I could pull the best, I could pull the best Monday, the best Tuesday, best Wednesday. So I plan to add that kind of stuff back in. The Max Factor's been going through some growing pains, but it'll be getting better soon. T-Oak. T-Oak is let's look here. I'm going to show real quick. T-Oak is T-Oak I always type T-Oak prospectus, and that's the best way to not get clickbait. It takes you usually right to the company site. If you just type T-Oak, well, okay, I didn't really want to show the prospectus, but anyway, okay, it's a fund that does something called box spreads. A box spread, let me show you. A box spread is a sure thing bet. It's an arbitrage, and it's with options. And so let's see here. All right, it's with options, and it's based on cooked into the option prices is the interest rates, because options have time value in them, and people borrow money to buy and sell options, and they're exactly correlated with they have the interest rates built into them, and then people, hedge funds and stuff, will sell options in lieu of taking a loan from the bank. They can go to the option market and go out a year, and they can do anyway. But these are short term little things they do every month or every week or something, and these replicate 3-month T-bills. So this thing makes whatever the 3-month T-bill is making just sure as any. It looked, even in April it didn't go down. Anyway, there's no risk, and there's other funds that do box spreads too. This guy's been on the channel. He's a really sharp guy, and but in any event, let's go here. Let me show you. So they have 3 ETFs. They have another one coming out. That's why I wanted to go here really quick. I'm just kind of stalling. Okay. So these guys are the most interesting fund out there that no one's heard of. Maybe that Kevin Kelly, that guy that's managing, that I also showed you, that's doing Q up and Q down. He's kind of a stealth guy also, but these guys are stealth guys. One of their funds manages like 250 million or something. They manage a lot of money. So T-Oak is the one I just showed you. They call it absolute return. That's hedge funds use that same name, but that's a style of there's absolute return funds and relative return funds. But anyway, so that's the box spread, what I call a box spread fund. It's probably an oversimplification, but go watch my interview with him, with Greg. This thing called TSPX is interesting. It's a fund that it's called the Active Opportunities. This thing right here is basically they make it where it's you don't have to. It's a 60-40 portfolio built into one ticker. It doesn't have any bonds, but they use options in such a way where they replicate a 60-40 portfolio. They use option spreads here and there, and they use different techniques called dispersion, hedge fund type stuff. Anyway, it's TSPX is interesting also, but the one that's most interesting is SPY-A. But T-Oak's the most interesting. So T-Oak, is a great for a sure thing fund if you wanted to mellow out another fund. Back to my example is kind of ridiculous. No one's going to make a 2-fund portfolio, but I like to oversimplify stuff. Yes, of course, Alti, Blocks, LFGY, WPay. Those are all super risky. No one's going to want to put their whole retirement in any of those because they're but if you, or even your whole income portfolio, in my opinion, but but a lot of people, what they'll do is they'll use those stocks, then they'll use QUSA, and some of the ones that pay T-Spy, some of the ones that are the triple QI that are more reliable, and that they balance it out that way. And so I was thinking, okay, if you had to do, but if somebody said you could only do a 2-stock portfolio, but I think it's an interesting exercise, because you can really, when you put Alti or whatever with the sure thing bet, you can really just extract, you can make Alti just the have the risk that you're looking for, because you can control it. And you guys all do it the same way by just using safer, by also mixing in some safer funds. But anyway, but this guy, this SPY A is really interesting too. This one, I forget the details on this one, but this one uses some sophisticated option strategies and is more like a hedged equity fund or something. Anyway, we're keeping an eye on all of them. But yeah, that's T Oak, and they're good guys, and they're interesting. They are interesting funds. FinViz. Let's look at FinViz really quick. Let me show you this. T Oak is impressive. I mean, now also here's the other thing: it doesn't pay a yield, but they have funds that do the same thing that do pay a yield. But but this one doesn't pay a yield, so this just appreciates in the same amount that a T-bill would, just as if you were in T-bills. Or that's the idea. I mean, there's no guarantees. I mean, the prospectus says there's no guarantee they're able to do this and stuff, but that's what it's been doing. But you saw that. That's a pretty smooth, that's pretty smooth looking there. Let's see, how much is, so this one only has 40 million in it. Okay, but let's look at old SPY A. These aren't on the max factor, but even though SPY A and TSPX are super interesting, but since they aren't yield funds, they aren't on the max factor. Is that really SPY A? You got to be kidding me. I haven't checked on SPY A in a while. Holy cow. You got to be kidding me, SPY A. So they have 50% in the Vanguard, the VOOS, and then I think they leverage up the rest of it. I'm trying to remember what they do, or not leverage up's the wrong word, but use. I don't know. We'll just have to look. But I just remember he was telling me I wouldn't really understand, and if I was trying to look at what they were doing, they did have callers on. But I said, so you're a caller fund? And he said, no. He said, I said, so you're hedged equity? And he said, no, because we're using those callers to slide into a bigger strategy later on here down the road. It'll become clearer later. So anyway, I don't know, but look at that though. I mean, they haven't been out that long, but holy cow, SPY A, what are you doing to it? So I mean, so it doesn't pay it. There's no yield. This one has 120 million, and I guess I can see why. Let's look at that TSPX really quick. The TSPX, I think, just goes up and down. I didn't realize SPY A was only going to go up like TO. That's my kind of fun. Okay, TSPX isn't in here for some reason. So anyway, that's fine. But so these guys have some, that one fund has 100 million under management. Anyway, okay, well, I'll do a review on that. But anyway, that's an interesting fund, isn't it? Thanks for asking that question, Surf and Wine. Yeah, I'll get the Alti video out and I'll explain more about T Oak. But one thing I should have explained with T Oak. So T Oak is for a guy that doesn't want an income but wants exposure. It's like a place to stash money. I mean, they don't charge. It's almost like cash. It's because they don't charge commissions really, and you can just buy and you sell stuff and have your money the next day. So you could just kind of use it like a CD, but it's not a CD. Just a place to stash cash, and it's not a total waste of money. it's up 95 bips for the quarter. For the year to date, it's up 296 basis points. It's up 451 basis points on the year. So it's that. All I was going to say is there's other there's other funds that do the same thing. I'm not an expert on these kinds of funds, not even close, but some of them, instead of just going up, instead of the price going up and they don't give you a payment, the price will go up a little bit, boom, then they'll give you a payment. The price will go up, then they'll give you a payment. So if you're looking for an income and you want exposure to this kind of stuff, you can do that as well. But this doesn't give a big enough pay. This is not an example of some, but there's some out there that do that, because you'll see they have a jigsaw chart where they just go straight sideways, because they're just arbitraging the market and just taking a tiny, just a little, just whatever the market will give you. And so anyway, all right. But there's other ones out there. You guys can actually pay is it SGov? Does SGov do that or something? Where it has a sawtooth, where it actually pays a yield, pays a coupon, they call it, but it's not really a coupon. In this case, it's a distribution yield because these are ETFs. But it's like it's a synthetic coupon. Yes. There we have it. So that's another place. And I could do that. I could do the same study with Alt-T and this if a guy needed cash in retirement. But I don't know. I think TOC works better because you don't want to, I don't know. I think use your, I say use TOC to stash money and get the yield from the high yield one, and don't worry about use the low yield for stability. But you could do it this way too, where it gives your money as you go along. And there it is. Dividends 4.35%. So that other one was 4.55, but it didn't give you anything. It just grew that much. This is 4.35, but they gave it to you. It's the same thing though. And if they lower interest rates back to zero, these will be bad investments. I know that. But lately they've been good investments, or they won't, but they can only do what they can do. So but it's interesting to be able to make this kind of bet in the options market. So that you're monetizing bond volatility, basically. Which I don't have enough confidence or know how to do, but you can just get with these ETFs, and they're doing a decent job. Yeah, I know it. What happens when rates drop? Well, it's what I've been saying the whole time. When rates drop, of course, this is baked into the option thing. So these will pay less also. But what I'm saying though, the same thing's going to happen if you go buy a CD after rates drop. Or everything's going to drop. That sucks. This is just one option that you can do. And really, this isn't a bond channel or whatever. If you thought rates were going to drop and they look like they might, there's all kinds of ways you could go lock in where the rates are now and stuff. But like I say, I'm definitely not the person to talk to you about that. But I tell you what, I promise I'll get to that Alti video. That's a really good video. You guys are going to like it. And I promise I'll do that. I need to do that today. And because it's a really interesting video. But I'll also show Alti and SGov for people that need income. I'm going to show Alti and TOC and Alti and SGov. But I get in the portfolio visualizer and I go back and look at a guy that tried to live off it, is trying to pull dividends off it. And I see how much, if it'd been a problem and how much was the most they were down and all that kind of stuff. And it's going to be a good episode. Okay. Yeah. So, I was just looking at that's awesome. It's okay. I'm sorry. I always try to talk about myself. You're putting your cash into gold, IAUI, SLJY, Biddy. I like Biddy. That Kevin Kelly guy I was just talking about is a sub-advisor on Biddy and Baggy from Kelly Intelligence. I think he's a friend of Jay's or anyway, whatever. It's awesome. Those are great funds. BCCC is a very interesting, because nothing else. It's actually weekly and it's from Global X. And I found it kind of interesting. And K Gold, yeah, heck yeah, I hear you. I was just looking at in other news. I was just looking at my my model portfolio today, and I haven't opened Tasty Trade in a couple of days, and I'm actually up 5.4%, and that's the most I've been up ever. Now the market's it's just because the market's hitting all-time highs. I'm probably still underperforming from when I got in, but I'm thrilled. So, but I need to reallocate my portfolio also. But anyway, one of the things that's been doing great in there is GDXY. GDXY and GPTY are my two investments that are up most. That GPTY, no one else likes that or whatever. I just like blue chips. And that thing is it's up more than my Alti is. It's up more than my LFGY is. It's up more than anything is except my GDXY. GDXY is just killing it. But yeah, I need to do something with that. I'm thrilled to freaking be up. Anyway, what are you? Those are your stable core funds along with SCHD. Yeah. So perfect example. A lot of people use SCHD and then they also use FEPI or whatever. Or what I'm saying, they use risky funds and then they use non-risk, and they use something like SCHD. This is the same thing I was trying to do with the TOC or an SCUV example. So yeah, no problem. I'll get you on the caps. But yeah, you guys are really going to like this video. But yeah, I'm just trying to break it down. What I'm trying to do is just extract the good stuff and leave all the bad stuff behind. Because I looked at a portfolio, and I'll show this in the video, of just going all in on Alti, and it's not pretty. Even though you have a lot of income, it's, like I would say, all yields aren't created equally. And that's the cost is, in my opinion, way too high. But when you mellow Alti out, I mean, so anyway, or whatever, and the thing is, if you need more income, you can add more. It's just your own recipe. I found the ratio I found was 75-25, but somebody else might like 50-50, and I tested 50-50, and 50-50 actually tested really well also. I think 50-50 also outperformed buy and hold. 50% Alti and 50% TO as part of an income sleeve. You got plenty of income, and you outperform just selling stock. So anyway, I'll get to that video. It's a good video. All right. So Surf and Wine, what are you saying? If you did not need the IRA in the future, why not do? Well, yeah, I mean, yeah, sure. JT, your risk is now in blocks. SEPI. I never talk about SEPI and AIPI. I don't know why, but they're good funds. Just like we don't talk about Curve that much. Curve and Rex just don't get talked about as much, but they both have really solid funds, as much as Round Hill and Yilmax. AIPI, XPay, yeah, XPay solid, XDTE. Yeah, but you could go full out in Alti too. I mean, you could, and here's the other thing I tested. So I tested my little formula about going Alti. Say I was 20% of the portfolio was 75 TO, 25 Alti. So what that really means is 5% of the overall portfolio was Alti. So then what I thought is, well, screw TO. And then I went VU 95 and Alti 5%. And that tests pretty well too. Like you say, you go all in on Alti, you just set it to taste. It's like you're making a recipe and you put the salt in there. You put it in for your taste, right? For some people that might add too much unwanted risk. I mean, it's both good and bad. There's good risk and there's unwanted risk. And, but anyway, but you could find your right ratio. Or you should be able to. That's the whole essence of the piece right there. But yeah, you could do Alti full out. Or just Alti could be your income sleeve. Yeah. I mean, it could be. I mean, and I'll test it that way. I'll test it that way for sure. We'll look at that because that's a good question. What are you saying, Froggy? Maxception. All right, your risk is now. You get paid on Monday, Thursday, Friday, week 2, week 4. That setup, sweet. Badass. So do you drip it? Do you live off it? It doesn't matter. You don't have to tell us. You probably do some of each. I bet you do a little of each. But anyway, all right. Well, I need to get busy on that video. It's a really good video. I don't know why I haven't put it out yet. Oh, it's a tunnel of Mac cams. I'm sorry. I'm sorry. I know it. That's bad. That's bad. It's because I need to get a second screen. I have one and it's never charged. Let's look at the market real quick. Well, we know T-Oak's up. I can bet you S-Gov's up. I bet all the ones we just got through talking about are up. But yeah, I'm glad you guys asked me about T-Oak. T-Oak people, it's an interesting fund. And SPY A and TSPX could also don't sleep on. Looks like the internet's running slow. Okay, it says ES is up 73 basis points, but it doesn't look all that. Oh, that's RSP. Doesn't look like it's up. All right, SPY's down 20 bips. I mean, come on, SPY. So when did the contract change happen? Did it happen this morning or yesterday morning? It looks like it happened this morning because these aren't really up that much when the Qs aren't up at all, right? Yeah, they're okay. It's just a contract change. So we're on the Zs. We're trading the Zs now, the Ds. They call those the Ds. All right, guys. I appreciate y'all. Are we trading the Zs or is it the fall? No, we've been trading the fall and now we're rolling to the Zs, to the Ds. It's HMUZ. H is spring, U is summer, M is fall, Z or Ds is winter. H is March, U is June, July, August, September. Yeah, there's September's and then they have October, November, December's. D's, of course. All right, guys, that's the option lesson for today. Yeah, I got it. Okay, so what is I think that my thing isn't adjusting for the contract change. Is I think when I turned dividends off or on, I think maybe adjust for contract change. That's it right there. There we have it. Boom. All right, there we have it. I fixed it. I adjusted for contract change. All right, guys. You guys have a good day, and I will talk to you soon.